I'm Joanna Simpson here at Risk Minds International in London. Joining me now are Paolo Fabris, partner at Avantage Reply, and Jasmine Pirillo, associate partner at Avantage Reply. Thank you both for joining me today. And Paolo, if I may start with you, please. The adoption of AI, machine learning and these technologies is a major change of mindset. You have to trust a model or approach that is not deterministic by construction. How do you see this developing over the next few years?
Not an easy question, because in general what we can see in this kind of situation is that we have two kinds of situations. So we are going to have the regulator on one side that doesn't like to change the models it was accustomed to. So it likes predictability, it likes to have deterministic results, it likes to know what's happening. So we will see something probably like it happened in other situations where there were major changes in the regulation, and we'll see a double track approach. So two reports, two way of reporting that are going to have two different situations. On the other side, the banks, the financial institutions that would like to adopt the new approach, but at the same time will be quite cautious in doing that because they still really don't know what's going to happen. So we'll have to understand what's going on, but at the end of the day, probably there will be a convergence.
And Jasmine, one of the most impactful regulations that risk officers have been facing for some years is the BCBS 239. The principles for effective risk data aggregation and risk reporting, alongside a strong increase in pressure from regulators on the quality of risk data. How can AI help?
I completely agree. Data quality is a big problem, and data quality is also a very impactful regulation for the banks and the risk officers, as the starting point of the definition of a data governance framework is precisely risk data. AI can certainly, and this is already happening, help risk officers in the creation of intelligent models for the identification of new controls to be applied on data, and also for the identification of automatic ways to correct these errors. AI models can also identify more or less frequent error patterns, and can also identify the way to correct these patterns of errors. And also this can be useful to optimize the time for designing and executing controls, but also for the applying of the remediations to the issue that the models can identify. And at the same time, also building up what Paul just said, it will help to build a kind of confidence with this new technology.
And Jasmine, AI is also forcefully entering credit risk transformation processes. What's one of the main objectives of banks in this area, and how are they exploiting AI?
One of the main objectives of credit risk transformation is undoubtedly the improvement in terms of execution time, reliability and the precision of the creditworthiness calculation models in the granting phase of the credit process. With the introduction of AI models, it will be possible, and this is also already happening, to abandon the old scorecard models in favor of new and more intelligent models capable to identify in an autonomous way which are the correct information to be considered for the model, and also which are the best logic to apply in the model. And this it results in a complete customer-tailored way to adapt the model. And we could picture a situation such as going to the bank and ask for a loan in the bank, and have a model which applied a specific creditworthiness calculation that is valid just only for us, almost only for us. and this based on the product we are requesting, of course. All this without an increase in the manual activities and in the effort that the credit operator has to put on his job.
And Paolo, how can you trust a model or algorithm that's not deterministic and that cannot be fully tested?
That is to be probably the most impactful topic, and it's where model risk will come in place. As Jasmine just said, probably in the beginning we are not going to completely get rid of the old deterministic models. We are going to put them together with the new models in order to get accustomed to the new outputs that we are going to have. We'll try to understand how to leverage of the huge amount of information that we are going to manage and that the banks already have, because they already have this kind of information. They don't use it. At the same time, we will need to somehow blend the competencies of people that are mainly working on the technological side with people who are working only on the business side. So if we will have, let's call them technicians, that are able to understand the business logic behind their models, behind their numbers, and not looking at the numbers only under the statistical or mathematical point of view. And at the same time, we will be able to have business people who can get the understanding of how the model works inside and how it can use all the amount of data that they have. Probably we will somehow get the top result out of that.
Paolo and Jasmine from Avantage Reply, thank you very much for your time.
Thank you.
Thank you.